Kia Corporation, born in 1944 and headquartered in Seoul, South Korea, began as a manufacturer of bicycle parts and has since grown into one of the world's most iconic automotive brands. From humble beginnings to becoming the second largest car maker in South Korea, behind only its parent company Hyundai, Kia has successfully navigated economic upheavals, market disruptions, and evolving consumer tastes. It now sells vehicles in more than 190 countries and continues to push boundaries in electric vehicle, EV, innovation, sustainable mobility, and global brand strategy. Kia is no longer just a budget-conscious automaker. The launch of its electric flagship EV9, its forward-thinking Plan S strategy, and a bold design overhaul have redefined the brand. What was once seen as practical and reliable is now viewed as stylish, progressive, and forward-looking. From an investor's standpoint, Kia represents a compelling blend of traditional industrial strength and future-focused growth. Let's explore the company through 5 key investment categories: fundamental metrics, financial health, growth indicators, valuation ratios, and performance metrics. I'll then offer a personal interpretation and conclusion, focused on real investment decision-making. Fundamental analysis is where we examine whether a company's financial core supports long-term confidence. Kia's recent numbers paint a strong picture. Earnings per share, EPS. Kia's EPS in 2024 was reported at approximately 21,000 South Korean won, roughly $15, indicating steady profitability. This represents a growth trend over the last 5 years. EPS growth has been driven by strong global demand, cost-cutting measures, and premium model sales. P/E ratio, the price-to-earnings (PE) ratio for Kia hovers between 6 and 8, much lower than global peers like Tesla or even Toyota. This low P/E might suggest undervaluation relative to earnings power. Investors may interpret this as a value stock hiding in a sector typically associated with high capital expenditure. Revenue. In 2024, Kia's total revenue exceeded 100 trillion South Korean won, $74 billion. This was a notable increase from previous years, driven by successful launches in the EV segment and robust sales in North America and Europe. Net income. Kia posted a net income of over 9 trillion South Korean won, $6.7 billion in the last fiscal year. Consistent net income builds investor confidence and enables reinvestment or dividend distribution. Dividend yield. Kia maintains a dividend yield of around 2% to 3%. While not the highest, it reflects management's balanced approach to rewarding shareholders while preserving capital for strategic investments, including R&D and green tech. Any potential investment requires a thorough checkup of the company's balance sheet. Debt-to-equity ratio. Kia maintains a debt-to-equity ratio below 0.4. This is conservative by industry standards, indicating prudent borrowing and financial flexibility. In a world of rising interest rates, this matters greatly. Current ratio. Kia's current ratio is around 1.3, suggesting healthy liquidity. The company is more than capable of meeting short-term obligations, a good indicator in uncertain economic times. Free cash flow. Free cash flow, FCF, has remained positive year over year. In 2023, Kia generated over 7 trillion South Korean won in FCF. This is crucial. It enables the company to fund its transformation into an EV-first company without relying on excessive external funding. Growth is where Kia has really started to shine, especially over the last 5 years. Revenue growth. Kia's 5-year compound annual growth rate, CAGR, for revenue stands around 6% to 8%. Key drivers include the success of its Telluride, Sportage, and EV series models in foreign markets. Earnings growth. Net income has grown faster than revenue, indicating efficiency improvements. Kia has streamlined operations and embraced lean manufacturing processes, especially during the COVID-19 pandemic when global logistics were stressed. Market cap. As of May 2025, Kia's market capitalization is around $35 billion. While this is still significantly lower than Tesla or BYD, it represents a strong foothold in the global auto market and leaves considerable room for growth. Kia's valuation continues to be a point of opportunity for many analysts. Price-to-book ratio, PB. Kia trades at a PB ratio of roughly 0.9 to 1.1. This is close to or even below its book value, making it a potential bargain for investors seeking intrinsic value. PEG ratio, price/earnings to growth. The PEG ratio is around 0.5 to 0.7, another clear sign the market has not fully priced in the company's earnings growth potential. This is often an attractive signal for value and growth investors alike. Now let's talk about how Kia performs in the market on a day-to-day basis. Beta: Kia's beta is around 1. This suggests it tracks with the broader market. It's neither overly volatile nor stagnant, offering balanced exposure for diversified portfolios. 52-week high/low: Kia stock has shown healthy movement, with a 52-week low near 61,000 South Korean won and a high of 91,000 South Korean won. This range gives technical traders potential entry points, while long-term investors can view this as price consolidation before a potential breakout. Personal analysis and commentary. What sets Kia apart from other automakers in 2025 is its successful transformation narrative. While many traditional car companies are struggling to define their role in a post-combustion engine world, Kia has clearly charted a course. Its Plan S strategy, which focuses on electrification, mobility services, and sustainability, shows that this is a company thinking ahead. Kia has also committed to achieving carbon neutrality by 2045 and is investing heavily in next-generation batteries, solid-state technologies, and autonomous driving software. The company's decision to pivot away from low-margin, high-volume strategies to premium, tech-focused vehicles mirrors Tesla's early playbook, only Kia has decades of manufacturing discipline to back it up. From a branding standpoint, Kia has undergone a revolution. Its new logo, brand identity, and marketing language signal confidence and ambition. In emerging markets, Kia is often seen as an aspirational purchase, offering quality and technology at a fair price. Of course, challenges remain. Kia faces intense competition from Chinese EV manufacturers, ongoing geopolitical tensions in the Asia-Pacific region, and the threat of inflation impacting consumer demand. However, its prudent financial management and consistent innovation suggest it's well equipped to navigate these obstacles. From my perspective as an investor, Kia Corporation is undervalued and underappreciated by the global market. It combines value metrics, low PE, low PB, with strong growth credentials, positive revenue/earnings trajectory, EV leadership. Its balance sheet is conservative yet flexible. Its strategy is bold yet backed by solid execution. If you're a long-term investor looking for a stock that bridges legacy manufacturing with next-gen innovation, Kia is a compelling choice. It's not a meme stock. It's not a gamble. It's a real company, with real revenue, real cash flow, and a real plan.